Welcome to Talking Property. Today, Australia's best property analyst, Louis Christopher, joins us to give his forecasts on the 2018 property market. Louis, thanks for joining us again today.
Good to be here, Peter.
What segments of the market do you think will do best in 2018?
This slowdown, in my view, overall has been fairly uniform. It's affected the top end and the lower end of the market. To me, that would suggest that on any type of recovery, as what we're suggesting, that the both ends of the market would be positively impacted. I certainly think the lower end of the market, because if I'm right, that means investors will be able to borrow more again, and they generally operate at the lower end of the marketplace. On top of that though, one thing that has not changed in Sydney is its powering economy. It's a very good local economy right now in Sydney. Unemployment continues to fall, and that generally helps the upper end of the marketplace because smaller and medium-sized business owners are doing relatively well thanks to the economy, and hence the reason why I'm also reasonably positive that the top end of the market's going to do okay in 2018.
When we spoke in the past and we discussed what impact APRA might have on the marketplace with these regulations, at the same time, government's introduced incentives for first home buyers, and at that time you're of the view that first home buyers were a big key to supporting the market as investors pull back and worthy borrowers were unable to enter the market, that the level of demand was going to come from first home buyers.
Well, I do think first home buyers have been in the marketplace. Certainly the ABS statistics show that there have been more first home buyers in the market, but perhaps there's some conjecture that have they actually completely offset the investors that have left the market?
Yes.
Maybe not when we look back in hindsight. There's been less investors and not as many first home buyers to offset those investors.
As Chinese investors do pull back from the market, and we're seeing instances on the ground of Chinese investors that can't settle because they can't get funding, and they're now trying to resell an off-the-plan property purchase before it settles. Do you think there's any chance of a wholesale crash in prices of in the magnitude of 20+% in the apartment market in 2018?
Oh, not due to Chinese investors not being there. It would take a number of triggers before we would get that type of price falls.
Yes.
Now keep in mind that, yes, I agree that foreign investors, particular Asian or Chinese investors, have had an influence upon the market. However, it's not the overall market.
Yes.
The foreign investor component of the market still only represents about circa 8%. So it's not a massive number. It is a number which can have some influence upon the market, but it wasn't the key number one driver behind the Sydney housing boom to begin with. That was low interest rates, very strong population growth, and not enough stock, because during the noughties we didn't build enough properties thanks to the state Labor government then.
And a strong economy.
And a local strong economy as well. These are the factors that drove the boom.
Yes.
And so when I look for triggers in terms of, okay, would we see a major crash next year? What would those triggers be? Well, not having enough Chinese investors in the market is not one of them. Really the triggers would be a massive oversupply scenario where the developers have gone crazy. Well, that's not playing out right now because the banks are not lending to the developers, so they're not out there exactly building a lot of stock right now. A spike in unemployment, I think that's unlikely given the fact we're not going to really see a rise in interest rates or a massive deterioration in the global economy. So I don't really see a trigger there. The other potential trigger is APRA being way too aggressive in the market and really rationing credit to owner-occupiers, first-home buyers, really going crazy a la GFC style. I think that's an unlikely scenario because the discussion from APRA of late has been that they're pretty pleased with what's happened to date. So that implies it's not going to really take a lot more further action.
From someone looking to buy an apartment, whether it's a first home buyer or a baby boomer downsizing or an investor coming into the marketplace, these off-the-plan resales where you do see foreign investors trying to get out before they need to settle, that distressed selling could create some buying opportunities in 2018.
It could create some buying opportunities in 2018, but it's not going to be the trigger for a massive crash.
Louis, just finally, a symptom of the Melbourne and Brisbane market respectively is that their apartment market has underperformed the housing market. Whereas for the majority of the boom, house price growth and apartment price growth was fairly level. Houses probably slightly outperformed apartments. You might want to correct that or confirm that. Whereas I speak to real estate agents in Melbourne and Brisbane, and they say houses are going great, apartments are a tough sell. Will we continue to see apartments and houses perform similarly in the marketplace, or will we also see a split in the performance of housing and apartments going forward?
You know, it's interesting on our numbers and being in this industry for a number of years now in terms of analysing real estate prices, I can tell you now that when you look at the total return between houses and units, they are broadly the same over the long term. Now, note my wording, the total return.
Yes.
So it's including the rent plus the capital growth. And the reality is that when it comes to capital growth, we've noted that houses are generally outperformers over and above units over the long term. However, over the short term, you can see periods where units do better than houses, and generally units yield better than houses. So that's why I always discuss the total return.
And obviously you tend to have higher maintenance costs with a house as opposed to an apartment, don't you?
Yes and no. Just keep in mind, of course, you can have issues with a sinking fund and things like that come along that can affect a whole block, which you as an owner have to still make a contribution to. So I think...
The dreaded special levy.
Yeah, that's exactly right. So when you take into account those factors, I think you'll actually find that the maintenance costs generally are very similar, if not slightly favouring houses, depending on the type of house you got.
In summary, Louis, 2018, what's your forecast for the Sydney property market?
So our forecast for 2018 in Sydney is for prices to rise somewhere between 4 to 8%. So we think what will happen is that the year will start off relatively slowly. Auction clearance rates will, however, be higher than where they finished off in 2017. So I'm expecting the market to sort of open up with an overall auction clearance rate of in the 60s. I think the market will improve as the year goes on. So it'll almost be like a repeat of 2016, where you may recall the market started up relatively slowly and then it just accelerated as the year went on, particularly once we got to the second half of the year.
If it starts to show those positive signs, does that set up a scenario where APRA might step in again with more measures?
Let's see. I mean, if the market really accelerates, which we don't think it will, I don't think it'll accelerate as much as what it did in the second half of 2016. Then, but yeah, if it did, yes, APRA may have to step in yet again. If, however, the gains are kept to single digits, which that is what our forecasts, I don't think APRA would step in.
Terrific. Louis, excellent information today. Thanks for joining us as always.
Great to be here, Peter. Thank you.
And thanks for watching Talking Property. We'll see you next time.